Hi guys, this is Mark Shawson, the Pattern Trader, and today I want to talk to you about the very sexy subject of Forex swap fees. But before I kind of get into the meat of that, I kind of want to give a shout out to Andy. Andy was good enough to send us an email. I just want to read it to you. This is Andy Marlowe. He goes, "Hey Mark, just a quick message to say thanks very much. I earned 1,844 pounds in just 3 hours on your dollar Swiss franc trade idea. I placed a trailing stop on both orders, so I cannot lose now on this trade. One very happy customer. Best regards, Andy." Always appreciate the good word, and even if it's not a good word, I always like to know how you guys are doing. So don't hesitate to let me know your thinking and how you're trading. Send me an email to mark@thepatterntrader.com. We also have a review website, and we're always eager to learn what our member experience is. So again, I'm really glad, Andy, that you made a couple of bucks in 3 hours. But really, I advocate a longer term strategy where I'm looking for bigger moves over the course of 3 days, could be 3 weeks, or even 3 months. Inevitably, that always brings up the question on these long-term trades, what about the swap fees? And swap fees are part of the broker charges for sitting in positions. So these swap fees are assessed every 2 days. On Wednesday, you get a bigger fee because it's assessed till the following Monday. Now, every week I do a free boot camp, Monday and Tuesday. And I kind of go through my strategy, go through my trades, and go through this long-term trading strategy. And inevitably, there's always a series of questions that come up. And today, this fellow brought up the question of swap fees. I'm just going to kind of read the dialogue because I kind of knew where this was going, but I was asking the questions nonetheless. So this was kind of an excerpt from the conversation on the webinar platform from today's boot camp, and a fellow ironically also named Mark. So Mark begins, "Well, what about the swap fees?" And I said to him, "Well, how many times a day are you trading?" And he said 5 times. And I said, "Okay, what is your average take profit?" And he said 50 pips, which is normally bigger than most people are trying. And then he also advocated that he took a 3-to-1 risk reward. And I said, "Does this mean then that you're averaging a stop loss of around 15 pips? Because obviously, if you're trying to extract 50 pips and you've got a 3-to-1, your stop loss is going to be around 15 pips." And he goes, "Yes, that's exactly right." I said, "Which pairs are you trading?" And he said, "Most of them, most of the USD pairs." And I asked, "Well, how is that going?" Before I asked it, I knew the outcome. And he said, "Disastrous." Now, why is this disastrous? Because what Mark is failing to understand is that he's trading 5 times a day. And, on a 20-25 day trading month, let's say, that's 125 trades in a month. And let's say your broker is charging you an average of 2 to 3 pips on a trade. Let's just assume a 1 lot for now. That means you're paying $3,750 to your broker on this spread. So this is a silent cost, but it is there nonetheless. So let me ask you, about a week or so, I got in the pound versus New Zealand dollar on the long side at 189.01. And I sat in that till 194.77. And I extracted 576 pips on one trade over about 8 trading days. Over the course of that time, Mark had made 40 trades. So who do you think's cost was less, and who do you think ended up making more? So, here I've just been in a handful of trades, 6 trades for the last month or so, and I'm up $119,000. And then when I X out $1,784 in swap fees and $348 in commissions, I'm up over $115,000. So again, and I've just got a half a dozen trades. I haven't done a half a dozen trades in a day. I've done a half a dozen trades over the last couple of weeks. So that, to my mind, is how you become a consistent, profitable trader over the long run. Instead of darting in and out of the market like a squirrel, hunting for nuts, you sit in one trade for the long term. Now, obviously, you have to have the skills and understand what you're doing and understand that it's going to work over the long run. But let's assume that it's far better than making multiple trades, because the only one who's going to come out of that end is your broker. He's the only one who's going to end up making money. So I hope this was helpful to you. I hope you got a ton of value. Now, if you want to sign up to the boot camp, I'll put a link to that. It's a free 2-day orientation, which I go through everything: my thought process, my strategy, my price action, price pattern, trading methodology. And feel free to use the link and sign up, and hopefully I'll see you on next week's boot camp. So until then, I hope you have a healthy and prosperous trading day, and I'll see you next time.